All right, hey there, everybody. Chris Franks with Texas West Capital, getting just a little bit of a late start this morning. It's just a few minutes after 11 a.m. Central Standard Time here on Tuesday, the 12th of October, on a rainy, overcast kind of morning leading into the afternoon here in Bernie, Texas. But, again, here in West Texas and Texas in general, we definitely can't complain about rain, so you won't hear that coming from me. Good to see y'all checking in. Hopefully y'all are having a great day. Lots of stuff going on. It's going to be a heck of a week, I think. We had the non-farm payrolls released last week. And I think there's a lot of wrong takes on that, so we'll kind of talk about that a little bit. But more importantly, because of that, I think we really need to pay attention to what goes on tomorrow with the September inflation report, as well as the FOMC minutes and the comments afterward with that. I think it's going to go a long way into telling us what's probably about to happen here. Remember, here's the thing, guys. It's not that there's going to be an immediate interest rate hike or anything like that, but it's this idea that when tapering starts, that's going to lead to that. And I think that's what's really kind of keeping the dollar pushing higher here. So we'll see what goes on with that. We'll take a look, and talk about it a bit, as well as everything else that's going on in the markets. Man, stocks just can't seem to catch a break, right? Again, guys, I've talked about it before. I've shown you the charts. 1987, Black Monday there in October of 87. That was after the top printed in August of 87, and then of course there is the Great Depression, which printed the top in August of 29. And then in October of 29, is when we started seeing the big drop. So, is what we're going through right now kind of lining up with that, more or less? I don't know. We'll see. And if it does, what happens to Bitcoin? I know a lot of people out there want to believe that everybody's all scared of the regular financial system, so are going to put all their money in this very risky thing called Bitcoin. That's, I think, probably the furthest thing from the truth. Again, when times get bad and people get scared, they tend to hoard money. They hoard cash. They're not going to hoard Bitcoin. There's going to be some out there who are going to hold on and hope that it just drops a little bit and then continues higher. But in the real world, guys, in this world of what's risky and what's not, if the economy starts tipping the other way, and so this doesn't have to happen right away, but when people get scared, they go to cash, because when uncertain things happen, they want to make sure they have cash to pay their bills, to do their things and whatnot. You still can't use Bitcoin to pay most of your bills or do whatever you need to do with that. Plus, the fact that if people decide to start selling off on it, all of a sudden your Bitcoin isn't worth what it was, whereas your dollar is going to gain strength. So, there's a lot there that most of the people you probably follow online, they're a lot like you want to be, which is very, very pro Bitcoin, Bitcoin's going to go up no matter what kind of idea. But we're here to be smart about it, right? We're here to be realistic, right? We're not here to, for somebody to puff smoke up your rear end. And so that way, just tell you what you want to hear, because how does that help you? If I sit here and I just tell you, oh yeah, sure, Bitcoin's going to go up no matter what, moon boys, let's go. That doesn't help you any. Because the likelihood, from somebody who's been doing this for a quarter of a century, is that Bitcoin won't go up if everything else is dropping. Now, I can't guarantee it won't. There's nothing that says it definitely cannot. But guys, the market is not guaranteed. There's nothing in the market that's guaranteed, except that if you're not using proper risk management, you're most likely going to lose everything you have and more. But at the end of the day, guys, I'm here to be a realist in what's going on here. And that's hard for a lot of people to expect or to accept, because, you put way too much money into Bitcoin, and, you've already bought everything in your head. You've already bought the Lambo and the island and the $5 million house and whatever else you've done. And it makes it really hard as human beings, because we have all this, this emotion and whatever. It makes it hard to kind of, pull away from that and listen and really be realistic. So, I don't know, hopefully the, hopefully there won't be any big kind of drop, right around the corner or anything, with the stock market and everything, because that gives Bitcoin time to run up. And even if it does, again, I think there might be this chance that Bitcoin still holds on for maybe a month beyond it, maybe a month and a half, something like that. So basically into the end of the year, if that were to happen here soon. But just as people, kind of try and do it, and maybe they kind of blow it up a bit, but, when that tops in, I think then that's it, So we'll see. Right now, we're still below 65, guys. We're making, great headroom there, almost at 60. But we haven't actually overcome that 65 yet. So we'll see what's going on there. Let me see here. Who's here already? Oscar, what's up? Alex checking in from Lakeville, Illinois. Great to have you here, man. Mark's up there. If you're not first, you're last, Ricky Bobby. My kind of humor, man. My kind of humor. Eriquin, what's going on, man? Good to see you here. Let me see here. Hank's here. Oh, Hank's shown up. Hank must be done, what is it? Hotel hopping, I guess, right? Let me see here. GT here. Who else is here already? Let me see what you guys have got here. Nevlusian, what's going on, man? YouTube TV Canal is here. GT says executive orders are expected to Biden. If you guys haven't been paying attention what's going on with Biden there, I've covered some of the stuff in last week's newsletter. If you guys haven't signed up for it, do so, man. It's over there on my Twitter profile, right there at the top under the bio, or you can just go ahead and click. Let me get that link for you guys. This one right here. And it goes out every Monday morning about 10 a.m. Central Standard Time. So, but some of the things that are going on with Biden, he's got all this tax stuff he wants to do. He's got, the Biden administration is talking about how they're watching oil and energy prices because we've got this kind of energy crisis thing going on. We've got, man, what don't we have? Man, it's everything about everything to get government involved, which I think at the end of the day is going to hurt more than it's going to help. But, it is what it is. So we'll see what's going on there, right? Let me see here. Oh, who else is here already? Data, what's going on there, man? Hank says the world is bigger than the U.S. It is not. But, I love it when we get comments like that because I understand the frustration. The world, the U.S. kind of puts itself out there, as this, end all be all in the world. And, there's a couple of things going for that. English is what we speak here in the U.S. is widely used throughout the world significantly. Debt, U.S. debt and where it's held, throughout the world is pretty huge, which means, again, demand for dollars. If you're going to, if you take out that debt, the U.S. debt, you've got to pay it back in dollars. So, the dollar is the world reserve currency. Oil is denominated, in dollars, petrodollar there. The U.S., once that oil price continues ticking up, if it hits 100 or, above that, you're going to see all this fracking again coming in. And, when that's in there, the U.S. leads the world in, in oil production. One of the largest economies, going in and out. So there's a lot behind that. And so I understand why, why people from outside the U.S. kind of feel that way. But the reality of it is the U.S. is significant in the world. It's one of the most significant. And if there was to be issue over here that, in terms of cryptocurrency or something like that, with the U.S. kind of making it, difficult to impossible to get into or to remain in for U.S. citizens, I'm going to tell you what, if you don't think that's going to have a strong negative effect on the Bitcoin market worldwide, I think you're just smoking something, man. Whoever's, would think that. It just, you got to get beyond emotions and whatnot. And it's hard sometimes when you got, like the U.S. coming out there doing everything it's doing. But you got to be, smart about it and understand that, if something were to happen that were to significantly reduce the ability of U.S. citizens to trade and or hold Bitcoin and other cryptocurrencies, it would have a severe negative impact on the, the cryptocurrency market. Now, does that mean it would necessarily drop off and die? No. But, it does make it a lot more difficult for that particular market to remain remain where it's at and or head higher, for sure. So we'll see what goes on with all that. Hobby Dons is here. Devin's here. 51 ETH. Good to see you, man. ARM is checking in. Michael Williams, good to see you guys. Mondi, what's going on, man? Always good to see you checking in. Merv is here as well. Hedar is here. Kyle is here, checking in from Pennsylvania. Crypto Surrency. Same people all the time. I love it, man. I love it. Hank says crypto is still a niche market with niche participants. I agree pretty much still. I do agree. I know it's expanded quite a bit, and it is a pretty large market. But the reality of it is, you have to be careful when you say, oh, well, so-and-so is getting involved and so-and-so is getting involved, all these big companies, and you kind of use that as your reason for being, why Bitcoin is going to continue to be this huge thing. I think you have to be careful with that because these companies and these firms and these, Goldman Sachs and all these guys, JP Morgan, all them, they've been in a lot of losing, industries throughout history, right? Just because they're in it doesn't mean it has to necessarily go up. And unfortunately, I think that's kind of the position that most of the laymen, most of the not Lehman Brothers, they're out. But the laymen, the amateur traders, the new ones coming in, people newer to Bitcoin or been in for a few years or whatever. I think that's kind of the position they take. Oh, look, so-and-so is here, so we've got to continue up. Or they, a couple of notable investors are in. Yes, that increases the odds that it could do well. It in no way guarantees it. Again, history is wrought with, wealthy people getting into bad investments. One of the things I pointed out here over the last week, I don't remember if I've done it here or in the newsletter or whatever. God, I do it so many different places. But is this idea that people are, just because they're good at what they do, as far as a business goes, those who, worker bees, the rest of us kind of thing, often take that to mean that they're good at investing. And we go, oh, well, they're in there, so holy crud, it must be great, right? But I need to warn you guys away from that. You don't want to get into thinking that because that's what keeps you with your money in the market, even when the market's telling you it's going the other way. The last thing you want to do is hold on when it's going that other way, especially significantly, right? Kryptonio, what's up? Always lurking, huh? Patrick is here. XRP Bandit. Telluride checking in. Let me see here. Oh, Hank, you're back? Oh, man. Isn't that always awful when you come back from a nice vacation? Especially when it's in a beautiful area that's a lot more different than where you normally live. And, you come back and you're like, oh, back to this regular thing here, right? 51H, you like the newsletters, man? Oh, that's awesome. Thank you for saying so. I appreciate it, man. For those of you that don't know, them newsletters take a lot of time to write up. Man, I mean, they take many, many hours to put together. It's crazy. You got to kind of decide what you want to add in, what you don't want to add in. I could I could put those newsletters 3 or 4 times the length of what they are, just with all the information's out there. So it's just kind of picking and choosing from that what's important to kind of concentrate maybe on it at the moment, and then maybe kind of give you a few links in the other direction, if it really needs to be. But yeah. Let me see here. Oscar wants to know, do weekly, monthly pivots even matter? Or is it more of a short time frame indicator most of the times? Oh, no, they definitely matter. As a matter of fact, it's like anything else. The longer the time frame, the more significant things are, right? So the longer the time frame, the more significant that longer time frame trend is, right? So the same thing with your support and resistance. The longer the time frame with those supports and resistances, the more significant they are, because they provide these larger time frame areas of reversal, right, or continuation. So they're definitely significant. That's why I'm usually looking toward the end of the month. I'm usually looking at the monthly with the pivots and whatnot, as well as I always kind of pay attention to those weeklies. If you guys have noticed, especially when we're talking about like Bitcoin, and we'll talk about where we are in terms of those weekly pivots. See where they are. Yeah. Michael says the government is not your friend. I agree. I agree. Tend to cause a lot more pain than anything else. And like I said, whether they believe that they're doing the right thing or not, the fact is they're going to do it. They're going to, those in power are in power because they want to be there. They're seeking out that power, right? You don't have people in charge that are wielding power that have been forced into that, right? So again, and I don't think that people in general are necessarily evil, from, at least as long as the chemicals in your brain are, balanced and doing what they're supposed to. But I think just people in general are lazy, and they tend to do what they can do for themselves, and they don't really overly think how it may hurt somebody else. And those who are hurt then often say, oh, well, those people are bad because they're purposely hurting us. And I don't think it's that way. I think it's just that, that people are just doing what they do, whether it's on a smaller a smaller scale, you yourself and what you do day to day, or some larger scale when you're part of some larger, powerful entity, right? So, the government is there to do what it's going to do. And, it has a mandate, but, as proposed by the Constitution, but, again, the people that are in there are going to continue to utilize the power that they have. And so whether they're doing something to just benefit themselves, or whether they really honestly believe that what they're doing is better, in either way, they're going to use that power. And so in either way, most likely somebody's going to get hurt. Some group of people are going to get hurt, and we've kind of been raised to believe that, democracy is such a great thing. And really, democracy is nothing more than rule by, mob rule, right? Think about it. Democracy is only just that and it's not even really all the time that those that are larger, the group is larger. It's that those who know how to utilize that power, to get in there. So the way the U.S., for instance, is set up, it sets itself up for lobbying, right? And so laws and legislation and licensing and all this stuff gets passed most of the time because somebody came in there and pushed somebody in Congress to, hey, you need to do this, you need to do it. And it was to their benefit. Again, I keep talking about, corn syrup. Back there in the 80s, we used to use sugar and everything for, everything. And then corn syrup lobbyists went in there and said, hey, you need to make it more difficult for sugar to get in here. And they did. And so all of a sudden everything went to corn syrup, and corn syrup's terrible for you, but it's in everything that we eat and drink, right? So, it is what it is, right? And so you just got to figure out how best to do for yourself, I guess, within that, hopefully not hurting other groups of people while you're at it. Let me see here. Let's see here. TV Canal, he's guaranteed, man, he just wants that short so bad. I've been talking about it for, months now, right? We'll see. Diego says, I'm okay with all that about the U.S. leading. I just hate when they call themselves America. Yeah, it's funny, isn't it? Well, there's North America, there's South America, there's Central America. We're the U.S., right? Let me see here. Hank says the EU and the U.S. are trading places on biggest economy depending on how you look at it. EU is still able to fine U.S. companies billions in fines. Could not happen to the U.S. with the big bully it thinks it is. Sure it could. And the U.S. is the big bully it thinks it is. Again, it is what it is. But, people are going to feel this way, and they're going to, look at it in any way they can, which, because frustrated with the U.S. coming out there and doing what it does and kind of throwing its weight around. And you know what, guys? I'm not a big fan of it either. I'm over here in the U.S. I'm not a big fan of it either. But at the end of the day, things are what they are. So the best we can do from somebody who used to always argue against all this stuff and do a lot against all this, I just found it doesn't really work because people are going to continue to do whatever they're going to do. And most of the people that are affected by it don't care enough to do anything about it. So what I've learned, over centuries, I'm not that old, over decades here, has been just to do what I can for me and my family to set us up as best possible, no matter what happens with that. And what I found, again, is that, this is why trading is such a great thing, because it gives you that that ability to be able to be free, right? So, wealth is real freedom. Wealth allows you to move around as you see fit, when you see fit, without worrying. Even if your government says you can't go, if you got money, you can go. There'll be a way for you to do it. And then, of course, it gives you that time, right? You're not locked into a 9 to 5 for somebody else doing what they want you to do when they want you to do it. So there's that freedom, in having wealth. And so I figured that out, at an early age, and it's always been at the top of my list. which is why I'm at where I'm at now. And hopefully, I kind of make that, strong enough argument there that people that are listening in kind of get to the point where they feel the same way. Because I think if you do that, then that gives you a chance to not be such a, not to be, where you're pushing in all the time, always trying to overtrade, too large a size, too much leverage, too often, taking trades you shouldn't be taking, stuff like that. Again, guys, God, man, I cannot say this enough. The biggest thing that you guys have to face as traders is yourself. It's your own emotion. The thing is, most of y'all won't do that. You won't get beyond that. So, I don't know, again, it's like I look in there and I try to say to my, because I see this and I know this and and not just me, but other people as well. And I go in there and I say, okay, well, how can I say this in such a way that it'll make sense, that it'll come across that, people will actually be like, okay, I need to listen in here because what's going on is really, the way it is, right? I think it was Dick Diamond who said that, about discipline being the strongest part of what you do as a trader, but not just as a trader, but in life. I think his big comparison he used to use was for weight loss, right? You know what you have to do to lose weight. But very few, and sometimes people get in, they lose the weight, but very few people actually get in there, do it. And of that, very few people actually continue to do that. They don't have that discipline to continue doing it, right? And so they gain that weight back. And so it's the same thing with trading. You have to be disciplined to be a trader over time. Everything that I talk about comes to discipline. But most people that come in never get to that point. You can get to it, you choose not to. And I think when you actually listen to what I'm saying here with that, and it kind of clicks in your head, you go, oh my gosh, yeah. I think that's the start of you having the opportunity to make a significant, wealth and a good career out of trading. But the reality of it is, very few of you, I keep telling you guys, I sit here, if I'm talking to 100 people, 5 may listen. 2 or 3 may actually go through the steps required, if I'm lucky. That's just life, man. And I hate it because if I could just kind of, reach out here, with healing hands of sorts, and heal all your angst and get you to understand what I'm saying here and really accept it, y'all would really just have an amazing potential career, in trading. But I can't do that. You have to actually step up and realize what I just said there and recognize that and take it in to do it. And if you don't do that, which again, most people won't, you could learn you could go through all this stuff. You go through all these courses, all these things, all this, all the time. And it's not going to do you any good because you don't ever establish that discipline. All right. Let me see here. Hey man, Dick Diamond was crazy, man. He had like almost 50 years of successful trading, man. He's crazy good. He passed away in 2014 or 15, I think. But man, there was a lot of great stuff that he taught as far as trading goes. And when you study, you'll see it's actually a lot of the same stuff that I talk about. About, again, that discipline, the idea that your emotions, you got to get your emotions under control. Risk management is important. Everybody out there wants to tell you how to get these large, huge trades, right? And I'm telling you, man, you don't need that. What you need to do is just lock in profit, rinse and repeat over and over again, right? You don't have to get in at the lowest price and get out at the highest price, or get out at the highest price and get in at the lowest price if you're shorting. That's a fool's errand, guys. It's so much easier just to catch in the middle there to get in on that trend, like a wave 3 when it's really kind of moving, and just kind of go in there and lock it in and go on about your business. I think many of you all probably find that you sit there and you could have taken profits and you didn't and then you end up, actually losing money. It goes up, and you think it's got to continue up higher and higher and higher, and then it comes back against you, and then you can't get yourself to get out of that trade, and then you end up either liquidated or finally covering when you're losing money, but you were actually up for a while there. And if you think back on, this is why, having a trading journal is so great, especially if you're a newer trader, because you can look back and you'll see that this is a consistent thing. And what does that tell you? If you see that you're consistently doing that, it's telling you that's what you need to change. But again, most traders don't go in with a trading journal either, right? Let me see. Kind of catch up with you guys here. Let me see here. Hey, take care, Diego. I see you're leaving there. All right. So big picture here. This is still what we're looking at on the weekly here, right? Let me see here. Oh, I don't have the pivots on here. Let me pull up these pivots real quick. All right. Still thrown off by this whole updated high-low standard kind of thing going on there. All right. Let me go ahead and just kind of clean these up here a bit. And stick this in a blue. Orange is fine. Let's take them off. Number of pivots back. Oh, darn, I hit the wrong one. Hit 0, didn't I? Yep. With one there. There we go. We got our local ones here. Now, for that question about are the pivots... Actually, you know what? Let me change these colors here too. That orange drives me nuts. Are weekly pivots still important, right? I think that was the question earlier, right? Weekly and monthly pivots. Sure they are. Watch this. Look at this right here. This weekly R1 pivot. Price is rejected, pulls back, pushes up through the R2, comes back, finds support around the R2, pushes up, reject the R3, support around the R2, drops down here, pushes up, support around, pulls back here, support on the R2, drops back down, resistance at the R2, pushes back up again. So yeah, your weekly pivots are still important. You asked because of the Ethereum USD Bitstamp chart, not because of Bitcoin. So what was your issue with it? If you said it, I missed it. I know there's a lot of tweets. We're already 100 messages into the thing here. We're barely a half hour in. So yeah, if you could let me know what made you about that chart think that, let me know. Let me see here. Let me see. Michael says, I'm learning to take 1% and be grateful. Yeah, the other thing that Dick Diamond was a big believer in was trading small. So using, it's something I talked to you guys about, Everybody's like, oh, but if I trade small, then basically what you're telling me when you say this is I won't be a millionaire next week and or tomorrow or something. That's what it boils down to. It's not happening fast enough for you, right? And so the problem with that is that's all with you. That's your emotion. If you use the smaller trades, there's less chance that you're going to get antsy, that you're going to do things you shouldn't be doing, that you're going to take trades you shouldn't be taking. Because it's a small trade. It's not that kind that's going to really just freak you out about it. And so, from a guy that did it for almost 50 years, guys, I mean, you'd be really ridiculous not to pay attention to the things that he thought were important. But yeah, definitely position size. It's the opposite. Most new traders come in and they're throwing everything with as much leverage as possible all in one shot and hoping it goes up. But, again, guys, I always tell you, you shouldn't be hoping and trading or wishing. It should be, here's your analysis. Here's where your entry, your stop loss, your take profit, and you let it go. You don't hope that it's going to go up there. You've got a reason why you think it's going up there. Something other than, oh, moon boy, right? You're looking at the chart. You've got some technical analysis that says, that it should potentially go up there if you're correct. But if it doesn't, then you're going to limit your loss as much as possible with the well-placed stop loss, right? And you're not going to go in everything all in all at once, right? And, the problem is most new traders aren't doing this either, right? You see, these things I talk about are the things that you guys want to do as new traders, as amateur traders. You come in here and you want to do the exact opposite of what you should be doing. Again, because emotion, because impatience, because you sit around on crypto Twitter all day and watch the one or two people talking about how much money they made, flipping an NFT or something, right? But, those that actually do it are the exception, not the rule. The rule is most people are losing, right? It's in trading, most people are losing. But especially in trading, it's not because they can't win, it's because they choose not to. And you choose not to win by doing the things you shouldn't be doing. See how that works? Blaze, what's up there, man? Good to see you checking in. Let me see here. Check Ethereum USD and just see for yourself. Oh, when you've got, are you talking about just because it moved fast? Well, yeah, it's the same thing as on your local time frames, guys. If you zoom in, Oscar, if you zoom into a smaller time frame and you look back a few sets of pivots, you'll see where price flies through those pivots like it's not there as well. Yeah, I mean, these are generally established areas of support and resistance, but that doesn't mean that price has to stop there. If you've got not enough supply and too much demand, or too much supply and not enough demand, I mean, it'll run up or down through those pivots. Sure. Just because the pivots are there doesn't mean price has to stop there. Again, if you have significant amounts of demand and not much supply, or significant amounts of supply and not much demand, price is just going to shoot through the pivots. Yeah, it doesn't matter the time frame. It happens, Kyle says, dude, kids in my town flipping NFTs. I know, right? Again, I hold by the fact that probably most of the people that make really good money with these NFTs are probably going to end up losing it all. Either they'll stick there in the market too long when it turns, the same way that most people do with trading, right? Everybody's a genius. Everybody's an expert in a bull market. When it turns and heads the other way, that's where people get caught. And you end up giving back usually everything, if not more, than what you made on the way up. So, yeah. That's why pivots are seldom used on longer time frames? No. I always use pivots on longer time frames. It worked great. I mean, you just have to understand what you're using. Sure. Yeah, Kyle, holding a bunch of digital art that is worthless after the hype. Potentially, yeah. Now, I mean, there's interesting, I think, uses for NFTs with gaming and whatnot. Again, guys, I am not as well read on NFTs as a lot of other people out there yet. And so, why don't I get involved? Because it's not a market that I really understand fully. I'm still not at that point where I can buy what's being sold at the moment as far as the narrative. But, part of that, again, it probably has to do with the fact that I'm not as well read into it. But, for me, it doesn't make any sense to get involved in something and put my capital at risk in something that I don't really understand. To buy it just to buy it because everybody's buying it to me is silly. I know I've never done that. And sometimes I've lost out, and that's okay. Because you're not going to be everything in every market, guys. Just have to work with it. You got to understand where you're at and what you're doing. Mark says NFTs are much more than art already. Yeah, I think you're going back to that idea of what's going on with games and whatever, right? Let me see here. So, what do we have here with Bitcoin? So, we were looking at this rallying up through here, unless we got this breakdown below wave 2 here. So, that's kind of where we are sitting here at the moment. Let me see here. Let me see if I can pull this other chart over here real quick. Oh, man. Can't get it to pull up. Try again. Nope. It ain't happening. Okay. But what I was going to try and pull over here is I've got this other chart. And so the one, I'm kind of looking at this going, okay, well, how is this setting up here, right? And so I think we're still trying for that 60. I think we're still trying to get up there. This is the 15-minute. We're down and oversold here. 1 hour, we're about to hit oversold on RSI. 4 hour, we're a bit higher up there on that, but we're about to hit oversold on Stochc RSI. And then, of course, you've got your daily, which is trying to curl up here, maybe head up a little bit higher, potentially kind of finishing this move up, right? So as far as my count goes at the moment here, I've got this as a 3 and 4 here. And with this, I was looking at this maybe as a leading diagonal as a 1-2, and then maybe a 1-2 here. It's possible that we could have this 1, 2, 3, 4, 1, 2, 3, 4, 5 up here kind of thing in this area. And so you get this 1, 2, 3, 4, and 5 kind of going on, and then an A, B, and a C maybe here. So this would have to move up to this area. And in which case, so far we would have pulled back now. Let's see, it'd be that right there. And so right now we pulled back, getting near that 61.8. You notice the 70.5's right here at the S1. The fact that we've dropped down below the pivot tells me we're probably going to hit this area here. You can see here on the 15-minute that we do have this cluster of demand right here. Right there in that area. So I wouldn't be surprised to see price, finish maybe a wave 2 down in here and then rally back up out of that. Now that we've broken down below this one. The other thought is maybe, maybe we've got some kind of flat going on here. So maybe we've got an ABC down and then an ABC up. And then we'll have 5 down. And if that's the case, we should be looking, let me kind of zoom out here a minute. We would look for price to likely drop below this swing low right here. So potentially come on down here toward the pivot and test it. So let me explain something to you. If we're looking at pivots here, what I often teach when I talk about pivots is that when you come in sideways between the pivot and the R1, if you continue up and get rejected at the R1 pivot, you'll usually look to come down here and retest the pivot down here. Now, that doesn't mean you have to come all the way down to the pivot. You can come a little bit above it. You can see we have the cluster of activity over here. So you can get down to this area, retest this pivot as support, and then rally back up above that swing high. And if you do that, that means, hey, we're headed up there now. We're looking pretty good. Probably going to run, those pivots on up. But, so if we continue to break down where it makes this idea of this 1, 2, 1, 2 here, no good. So we drop down below the swing low over here at 54,381. Is that what that is? 54,381.93. If we're dropping down below that, I'm looking for price to come on down toward this low here, potentially as a flat maybe here for wave 4 before it rallies up. But if we're rallying from like the 70.5 or the 78 or something like this, prior to this wave parentheses 2 swing low here, and we rally back up above this, I mean, that tells me we've got a potential 1, 2, 1, 2 here, and we're heading up, which opens up, to the upside there. So, I mean, that's really how I'm looking at it. Do we get this reversal prior to this swing low here at 54,381.93? Do we get a rally back above this wave 1? If so, then 60,000 plus should be in the cards. If we drop down below that, then I'm looking for a reversal around this pivot. And if we can get that and it breaks out above this swing high up here, well, again, then you're looking 60,000 plus. But if you lose that pivot and continue lower, then that says, okay, maybe we've got, maybe this is 5 up somehow here, and this is 5, and we've got a larger wave 4 in progress. In which case, then, we're looking right here around this 51,400 and down here at the S1 pivot at 48.9 as targets, possibly on that way down there. So that's what I'd look there. Hey there, Crypto Girl. Good to see you. Let me see here. Let me kind of catch up with you guys. Oh, you guys are talking about the games there with the NFTs, right? um, let me see here. Kryptonio says gaming NFTs will be big, but only if the game is like World of Warcraft or EVE Online. Someone will get the formula eventually. All the mobile style NFT games will crash and burn. What's going on, Block Tech? Good to see you checking in. Let's see here. Let's see here. What about a drop to 52 to 48, then really up to new high? I think I just kind of said that, right? I think I just said that. So again, being this either this high volume node here or this S1 pivot on the 1 hour is where I'd look for that if it went down that low. You know, I don't know. I think it would have to be probably a pretty strong drop, you know, like a kind of like this coming down, if it's going to do that, just because we're almost oversold with the 1 hour RSI already. That 4 hour RSI has some room to go if it wanted to do that. But I mean, you know, as far as this goes right now, this is still very bullish structure so far, guys. And especially if you're looking from, you know, down here continuing up. As a matter of fact, here on the 4 hour, let's jump out to the daily here. Yeah, look at that. It showed up better on the 4 hour. Look at that high volume node. That's where we're at. So really, you're looking, as long as you're remaining in this, that 55,000 area, as long as you can rally up off that and back above, this is going to, you know, make a good base here. You're going to rally on, you know, higher from that. If you're dropping below that, then you have to push up back through it again. And there's all that. Remember, these levels right here, if you use this VPVR, this just tells you the price levels where the most action has happened. So it's the levels at which the market is most interested at. You know, as far as what's on your chart for the length of time on your chart. So for us, coming here from the last half of January there, almost about mid-January, to now, you know, you can see the significant areas of interest. Right here where we're at, we're trying to break out above. Right down here where we kind of came in and boom. You see what we did here? We went up and came back and bounced in it. And then went up. And so we're kind of doing that same thing right here. You know, do we get here, boom, and go up? We've got support built right here. You know, which we built from last few days, almost a week now. All this sideways here. And so, you know, realistically, we're just kind of coming back to that range and retesting those range highs as support. You know, like what we did right here, where we've got this range. We pulled back to it, rallied back up. Same idea, I think, is potentially what's just going on here. But we'll see. We'll see if it does. You know, if not, we'll just look at those levels mentioned as far as what that count may be happening with it. Coming off this top here, you know, here on the 4 hour, it does look like a, you know, an ABC right now in motion. And again, we're just right here at the previous resistance. So, you know, our 4 hours about to dip into oversold. We've got another 3 hours left in this particular candle. We're dipping just below the swing low here. So, you know, do we dip below it, give us a bear trap, and then rally right on back out? You know, as in the form of 3 waves down. That's what I'm interested in. Everything else aside. Right here. Let me see here. If this 4 hour candle holds mid Bollinger Bands, still a chance this rally continues. Oh, yeah, you've got the Bollinger Bands on there? Yeah, let's take a look real quick. Yeah, so it just needs to hold right here, kind of like what we saw over in here. So Kyle's right. You know, if we get something like this where it holds and rallies back up, minimum we should be looking to the you know, the Bollinger Band's upper band there, as far as what's going on with it, right? So, yeah, I mean, that 4 hours looking, you know, pretty sharp there. You know, we had the squeeze here in the breakout. Same thing we had right in here, and of course this kind of area right there. Daily, we're still riding the top here. So the daily has that middle Bollinger Band down here at around 48.5, you know, and that'll, as this plays out, that'll continue to rise. You know, so here's the thing. On the daily pivots here, I would expect normally with this structure here for us to get support in this area here and then continue rallying up. And if we lose that, I would normally expect price to just kind of find some support right here around the R1 pivot and then head up. I would get a bit more concerned, I think, if we were to pull all the way back to the pivot here. Because we've already gone up almost to the R2. And once you're into the pivots, most often price kind of uses the pivots, right? So resistance, it should find support around this one. And if it's, bullish, it should then continue up to the R3 or, higher, pull back to the previous pivot, continue up. That's most often how it plays out. So if we were here on this, this daily time frame here, if we were to lose this R1 pivot and kind of, I would hope to God it catches right here around this high volume node, this demand block right here, right around that 47,900 area. Because if it doesn't, to me, I think we at least head down to the S1 here. And then that starts looking all sorts of different, right? So we'll see what happens with that. But, just that larger time frame, that's kind of what I'd watch on that. Hunter says that some say the cycles get longer each time, ergo this time looking for a top in the springtime. It's a lot of guessing right now, is what it is. Because if you look at it in terms of Elliott Wave, right? The cycles don't, it doesn't go, wave one, that cycle, wave one is the shortest, and then wave three is the middle, and then wave five is the longest, right? Sometimes wave five is the longest, sometimes wave one is the longest, sometimes, or most of the time, wave three is the longest, right? So I don't know that I necessarily buy into that. We're looking at that. And also, it seems to me that, I don't know, again, we're looking at the possibility of what may be going on with, with the economy overall, with the dollar and everything. I don't know. If that is to happen, here in October, November or whatever, we get this roll off the cliff, the markets just dive, a la 1987 or, 1929. I don't see how Bitcoin continues that rally up there into the spring. Again, I'm sure not everybody's going to sell right away, so it could remain elevated for a bit afterward, but the idea that it stays elevated for, months and months and months as the economy is just nosediving, that goes against just usual market movement, right? So I don't know that I necessarily agree with that. But, again, if the markets continue to rally, if the top's not in, and the stock markets continue to go up and the economy doesn't actually fall off a cliff here in the next month, well, then maybe we could see Bitcoin extend into spring. And, again, guys, before you start saying, oh, I'm this Bitcoin hater or whatever, no, actually, I would love to see that because it means a lot more time to get a lot more, a lot higher, which means my investments grow a lot more. So it's not that I don't want it to happen. I would love for it to happen. But I'm not going to blindly just sit here and go, oh, that's what is going to happen, right? Trying to be more logical about this based on, my experience and my education and whatnot, especially with this type of thing and macroeconomics and all that. But never to the point that I definitely know what's going on and everybody else is wrong kind of idea. We'll find out when things happen who's wrong, who's right. It doesn't. But to me, that's not the real big deal. I don't care whether I'm wrong or right. I care whether I'm making money. That's what I care about. And I think too many times you guys might notice, if you're not doing it, you'll notice that other amateur traders are doing it, where they put a lot more emphasis on who's right and who's wrong. And, and it's always who's the latest, who's right the latest. It's not who has a track record of being right or wrong, who's right the latest, whatever. But they're just worried about who's right or wrong rather than worrying about making money. And I think that's the big trap that y'all often fall into when you get started trading. It's what I fell into when I first started. So yeah. Yeah, if this is the fifth wave in the big picture, oh man. Yeah, EWI has this product that they send out each month called Elliott Wave Theorist. And it's Robert Prechter's thing. He actually writes it every month. And man, a very sobering issue this past month. Kind of talking about, well, if this is the top, if this is that super cycle top here and we're coming down, we're potentially talking about a bear market that lasts I mean, some of you guys are going to laugh. Some of you guys get scared here, but seriously, potentially 100 plus years. And you do that based on the market starting back, in the 1700s, and in terms of that, the last great super cycle pullback we had back then in the early mid 1700s, which lasted itself, whatever it was, 60 or 80 years. This isn't out of silly, it isn't, silly that it would be. Now, I think most people tend to think, oh, that means everything just drops and drops and drops for, 100 years. No. It makes a bottom, and then, price has to, it basically is going to go sideways. It's going to make a big move down, big move down. Bigger than anybody's anticipating is what it would be, right? Really significant. Like we're talking, maybe 1960s, maybe 1930s level, 1940s level low. And then there's a lot of correction and move, whatever, that has to start off that. So that market being, in that low phase there and that drop there for, that length of time. And there's so many ways that markets can play out, right? Flats, triangles, zigzags, stuff like that. But anyway, I can't go here and, and kind of share everything that he says in there because obviously, it's his material and whatnot. But if you're interested in hearing more about that, maybe you sign up for it and grab it and kind of really check it out. And again, if you're a trader, guys, there's nothing wrong with that situation coming in. I mean, at least not as far as trading goes. Because trading, again, it doesn't matter if price is going up or down. It just matters that it's moving. Because that's what you can get in and trade it, right? Investors, that's where it hurts. People who aren't in the markets, people who are trying to retire, people who are hopefully trying to keep jobs, that's where it hurts. Because there's going to be a significant impact on the economy, with that kind of drop. But, it doesn't have to happen. There's no guarantees it's going to happen. But I think if you ignore it for what it is, I think you do it at your own peril, right? We'll see what happens. I think it's much more better. Really, did I say that? I think it's much better to be prepared, to understand what may be coming, rather than to just pretend it has no chance of happening. So we'll see what happens. But yeah, I can guarantee you, if it does happen, most of the world's going to be caught off guard. And that's why it's going to make it even worse. So, yeah. Yeah, eventually everything has to contract, exactly. There is things don't go up forever. And the longer that cycle you're in, the longer that cycle goes up, the more that pullback's going to be. If you're looking at K cycles, same idea. It's not just Elliott Wave. You got the K cycle winter coming up, right? Quadratif winter. So, and then it goes in with so many other things. With the way, if you guys haven't been paying attention to the way things are changing in this world over the last 4 years, especially, I mean, what's going on? In terms of wars ending that have been going on forever, and, for us here anyway, the government push to get its hands in more and more, provide more, people more concerned about whatever their sexual orientation may be or whatever, or they feel like their gender is not what it is, and there's that big acceptance of that. And I'm not saying that's right, wrong, or otherwise. I'm just saying these are the things that are coming up. There's a lot of changes that are happening right now at the same time. A lot of things that seem to be more, what's the word I want to use here? It seems to be more that things are happening in a way that is more positive for human beings. So, more positive than what it's been. But at the same thing, when things become more positive like that, where people are more concerned about what others are saying rather than, doing what they need to do to provide for themselves. There's that big trade-off, and that can cause a lot of issue. I think it's probably the way to say it. Remember, we're always looking for cycles. Remember, when I talk about the charts here, we're talking about their visual representation of what the populace is feeling, right? So it's socioeconomic theory, right? So how are the people feeling, right? And that translates into how the market moves and reacts and trades and whatnot. So if people are generally more, generally happier, so they think times are potentially better for people in general than what they've been, or more positive, then the market shows that. And what have we had here, especially, into this last few years, has been this big move up, right, in the markets. And, for a lot of y'all that don't normally study this type of thing, I understand you're going to see that, maybe laugh or, have trouble wrapping your head around what I'm talking about. But that's okay. That's okay. Most people aren't going to get it. Most people aren't going to, like I said, it's going to catch them off guard if it happens. Until it does, you continue to trade up with the market, right? If your time frame that you're on, that trend is up, you can erase a whole bunch of hardships that you have as traders if you only trade in the direction of the trend. If it's going up, trade it up. If it's going down, you trade it down. So yeah, much more better English is hard. It is. It doesn't matter how educated you are, right? I've got 2 master's degrees and a law degree, and I still can't speak. Let me see here. Puppy Chow, scroll back in the video, man. I talked about where I was looking for Bitcoin to go, potentially. And some options there if it does continue lower, where to look, and what that may, entail as far as the count goes and everything. Yeah. Let's see here. What chart gives us the longest history of the market? If you're talking about Bitcoin, that's going to be your, let me see if I can do this here. That's going to be your BLX, Bitcoin Liquid, Brave New Coin Liquid Index. This will give you your longest chart for Bitcoin here. And this will come at you from back here in 2010. Try with these Bollinger Bands here. So I get you back over here from 2010 on up. So that's going to get you your longest one there. If you want to know what chart gives you your longest term on the markets, the one that you can get here, there's other charts that you can find elsewhere online. But if you're just looking for what you can find online here, your Dow Jones Industrial Average will probably be the one that you're going to want to be looking at. This is the one that comes back down here from 1896 on up. Here's the Great Depression. Here's the dot-com bubble. Here is the Great Financial Crisis. And then here we are here. And something, I've pointed out before, and I want to point out again here, guys, is remember this whole idea, this whole decade here, basically, from 2001 here, from the dot-com bubble up here, 2001 coming up there, through 2009 here, the bottom of the GFC. This is all just a trading range. This is just consolidation, reaccumulation before it headed higher there. You have this other reaccumulation range, if you guys haven't been paying attention, back here from the 60s to 70s. Well, I guess into 80 there. You have this kind of range right here. So, and then you have, of course, this one right here from 37 or so. Gotta put this up there. Yeah, what was that, 37? 30, yeah, about 38. 37, 38. And it finally breaks out here at about 45. So what you have is you have this big move down here, right? This big drop. And then you've got reaccumulation, reaccumulation, reaccumulation. And here we are, right? And that's kind of, where we're sitting at this time, and of course we have this This is most likely a wave 4 here because you can actually get this this rare inverted megaphone pattern, or a megaphone pattern inverted symmetrical triangle. You know, usually for the symmetrical triangles, we're looking for them to do this, to consolidate, right? And in this case, you get it where it's expanding. It's this megaphone pattern. So you get this A, B, C, D, E. That was at March 2020. And then this is wave 5 coming out of that. So yeah. That's where where you'd want to look at. Hey, have a great day, Crypto Mowgli. Yeah. So when you're looking here again, the Dow Jones is the best one to do here. Like I said, there are some other charts out there. I'll have to see if I can find them, maybe share them with you guys over there in Discord, where you can get like kind of the market idea coming from the early 1700s to now. You know, you've got the Great Sea bubble and all that kind of stuff. By the way, the last time prior to this, what we're looking at as potential this super cycle top would be that Great Sea bubble that we had. That would be the other one. That would be the other time there. And so, you know, again, we just kind of get to this point here where we're generally looking at possibly this top up here, this fifth wave, right? Coming off here. And so, you know, again, coming off of, you know, as we're watching this here, right, coming on up. So you got this wave 4 locally right here, which gives us this wave 5. But, you know, again, a decade, almost 15 years here, almost a decade here sideways, right? But what we're talking about in terms of this is if it does, I mean, you know, we're talking about probably, you know, at least that, right? I know. We don't want to believe it's going to happen. We don't want to believe it could happen, right? I can't guarantee it's going to happen, but that's the idea of what we're looking at in terms of Elliott Wave. Like I said, Prechter does an amazing job of kind of discussing it and the different possibilities and why he potentially feels like it's going to, you know, maybe develop a certain way versus another way in that latest Elliott Wave theorist. So I think it's a great thing to keep up with, you know, especially if you don't trade Elliott Waves, or maybe especially if you do. Just to give you a better idea of how this, you know, a good written up explanation of what's potentially going on here. Let me see. Let's see here. 22, are you kidding? I don't know. Who are you talking to? 22 who? Let's see here. Let me see. Why would we look at linear, Hank? Why would we look, when there's such a strong move out there, why would we look at linear? That doesn't make a whole lot of sense. Because people aren't trading linearly. They're trading relationally, right? So as I always say, you know, when you get in the market at $100 and you're looking for 10%, that's only $10. If you're getting in the market at $1,000, you're looking for 10%, that's $100. If you're getting it at $100,000, 10% is $10,000, right? So you're interested relationally when you have large moves. I don't think linear does absolutely nothing when you look in terms of market when you've got large moves going on, because it completely ignores the way that people trade just to get a linear chart. You know, it doesn't make any sense. People don't trade on linear charts, you know, with that mindset. They trade relationally. Yeah. So it's not like they're looking to make 10% or they're going to make $10. They're looking to make 10%. And depending on where price is, that 10% is going to be more or less than what it was at the other point. Yeah. 22 likes, he was saying. Well, I appreciate you pushing for that with the 22 likes. Yeah. Well, Hank, no, I get what you're saying, man. A different perspective, but a different perspective isn't necessarily a worthy perspective. You know what I'm saying? You know, I think this world is so full of everybody believes that they're, oh, well, you know, that's my, and I'm not talking to you specifically, Hank. I'm just saying people in general today I've noticed a lot of this, well, that's my opinion, so you have to respect that. No, I don't. No, I don't. Just because you have an opinion doesn't mean it's worth anything. And I don't mean that to be rude. I mean that to be realistic. If I've never seen a car before in my life and it's not starting, and a mechanic looks at it and says, I think it's this, and then I say, well, you know what? I think it's this. No, why does that mechanic have to respect, or anybody else have to respect your opinion? You've never seen a car before, or I've never seen a car before in my life. What the heck, right? But yet the world today is so interested in people in them making themselves feel good and not feeling like they have some kind of mark in this world that they believe that people have to get on their side, have to respect that they have an opinion. No, you don't. And again, it's not meant to be rude. It's meant to be realistic. And so in terms of perspectives, right? Not all perspectives, we don't entertain other options just to entertain other options. You see what I'm saying? Not all perspectives are worthy of the same level of scrutiny. And so when you're talking about large movements and the way that people trade, again, come in for 10%, not $10. And so I don't think that when you have large moves, I don't think that looking at that linear chart gives you any kind of different look at it. It's just a look at it, but it doesn't make a lot of sense in terms of what's going on with the market there. But, again, that's been my view for, a couple of decades now. And it's proven to work out pretty well. But, if y'all need to look at linear charts, look at linear charts. Again, my argument's been made, it's for why I don't think that when you've got these large movements, why linear charts help any. I think they're a distraction more than anything else. But, again, you don't have to agree with me. It is what it is. My opinions, are based in, few decades of doing what I do pretty successfully. So there is that, if it means anything to you. But again, this was that .com bubble, crash, GFC, bottom, and then rally up through here. So you get the, you have 2011 here, you have 2016 here, and then of course you get up into 18, into 19, which gives you that drop down here in March of 20, and the rally out of that since. Kind of interesting when you step back and you kind of look at it and go, wow, okay, that's what's going on, right? Let's see here. Have I done the DXY yet? Yeah, I'm doing it right now. So DXY, I've got two possibilities on here that I'm looking at. So I'm looking at either maybe we've got a triangle here in red, in which case then we're looking for this. If we look at the height of the triangle here, if the triangle's correct. Whoops. He's right there. We go. Gives us his target up here of 94.928. Or it's possible that this isn't a triangle. My original count is in black there. And that suggests we've got a 3 and a 4 here instead of over here. And we've got a 1, 2, and we're heading up on that. If that's the case, locally we may have a wave 3 here. 1, 2, 3. Around that 94,642 area. Forward pull back if I get up. But really kind of looking at this wave parentheses 3 up here at about 95,198, which gets us then this larger wave numeral 3 here, Roman numeral 3 up there around 94.5, 95.5. So that's kind of where I'm looking at that for that. I'm not sure if it's the triangle here or not. Like I said, I had the black count until the other day, and this kept consolidating here. I'm like, well, that looks like it could potentially be a triangle sitting up here. And And so that's why I put that triangle possibility in there. So basically, if it continues to rally up through that triangle target there, I think we can probably look for it to potentially be playing out this black count. And either way, I think we're probably headed at least up here around the 94.928. Now, the significance of that, 94.734, we're finally almost there. If you'll remember, that is my wave 4 target, or my wave 4 over here. 742? What do I have it here? 743? 742. There we go. We'll put it right there. Anyway, if the Elliott Wave count is correct coming down here, then getting up above that wave 4 is the first clue that count may be correct. Getting up above wave 4 means that wave 5 cannot subdivide any further. So that's what that would be. Now, obviously, I mean, it looks pretty bullish, right? I mean, it's hard to say it doesn't. Structure-wise, we've got this double bottom-ish kind of thing going on here, right? I don't know. Is it maybe like, it's not really a double bottom because it breaks out above and pulls back, okay? But could it be an inverted head and shoulders complex, has two heads? So, let me see here. Go ahead and make a copy of this real quick. What's today, 12th? And so, if we look at that, let me kind of zoom back out here again to the right time frame here. So what I'm looking at would be interesting. And I don't know. I just, honestly, when I was talking about it is when I just saw it, guys. So, and I hate head and shoulders. But maybe something like this, again, with this double head, this complex head and shoulders here. So you break out here, boom, boom. And I mean, you even have a pullback and a retest of that neckline that goes up there. And so now if that's, if that's legit, if that ends up being a complex inverse head and shoulders there, then price has no business dropping back below this neckline. And so then the target based on the height of that is 98.714. Yeah, Hank. No kidding. Yeah, Euro USD has come up to resistance the same way that the DXY is coming up to, or its support the same way DXY is coming up to its resistance here. Yeah, definitely. We still have to get that breakout, and I'm looking for a breakout of impulsiveness. Again, guys, if you get my newsletter, this is what we're looking at, right? Let me see up here. Let me see here. Let me kind of zoom out a bit. Nope, daily. This is not the right one. Where is it? Oh, you know what? It's the, it's the futures. Because it has a volume on it. So I was pulling up the DXY futures there. Dollar futures, there we go. That's what I'm looking for. So if you're following, this has kind of been the thing that I've been looking at there in the newsletter for the few weeks here. And so we've got this ascending channel here of which price came out, pulled back into the green zone there, and then rallied back out of it. And we're coming up to the top here. We're breaking up above the weekly pivot on a large candle spread. We'll see if we get enough volume with that to really kind of make it worth it. But again, looking for that breakout here on the dollar futures. That wave 4 is a little bit higher at 94.795. But again, it's because it's not the DXY. It's the futures based on that. Price a little bit different. Same idea, though. It's got to get above that. Now, that would be just the first step in confirming this macro bottom, as I said. This blue swing has a target up here of 97.77. And so again, jumping back over here, just a bit higher there is at 98.7. So basically 1 tick higher, 1 point higher there would be this potential complex inverse head and shoulders heading up to there. I don't know that I still like this at all, but Compelling is that we broke out and we pulled back and retested, and we're trying to break out again. Let me see here. We pull back. Yeah, see? Let me see. Let me get on the weekly here with that. I'm trying to see where that volume comes in there. See if we've got that volume to kind of support the idea that maybe that's what's going on there. Oh, it doesn't give you weekly volume here, does it? Nope. 3-day? Nope, just daily volume. Or is this the wrong one? Oh, this is the other one. Sorry, guys. Trying to keep up with everything here. Let me see. Let me just throw this on here real quick. So again, be the right there, right here, right about there, here. All right, and so what we can notice is that we do have volume expansion and large candle spreads as we come out of what would be the right shoulder. So the proper way to have a inverse head and shoulders is this. You want to see after that right shoulder prints, you want to see large candle spreads and expanding volume as you continue up and break out through. So as a matter of fact, it came out through that resistance on the heaviest volume right there. And pulled back. So, you know, I mean, it really may be, guys. As much as I hate these head and shoulders patterns, it really might be what's going on there in terms of patterns. And so, again, that gets you just a bit higher there. If you look at where it actually takes you, look at this. Look left. It takes you right about that area. Support, resistance area. Look at that. Right in this area right here. So makes a lot of sense to where it would be. Very interesting. So yeah, I just saw that right there with you guys. So there's something new that might actually be where it is, right? Let me see here. Let's see here. Maybe you were front run, Hank? Well, yeah, I would normally, if this, but this right here, Hank, this would be a double head. This would be a complex inverse head and shoulders, two heads. Sometimes you get them with two heads, sometimes with two left or two right shoulders. Yeah, so, I mean, it's nothing to disregard here. It would be a double head right there and right there, making it a complex inverse head and shoulders. So, yeah, that's why I don't discard it. You know, and then, of course, we look at everything else, and everything else kind of says, well, that's potentially what's going on there. But, you know, again, you don't even have to have that. You can just look at the ascending channel here, and it's that same kind of area where you're breaking out through that, you know, on that same volume and candle spread through there. Not a double bottom because it breaks out above this midpoint right here. It breaks out above and pulls back. If it's a double bottom, it should break out and remain above the swing high in the middle. Because I was talking about that being a double bottom until it did that, remember? So, I don't, you know, again, if it's a double bottom, it should break out and stay out above that. It should break out and maybe come back and retest that middle rally right there. And then it should continue up. So, yeah, that's why I got rid of that. You know, back here, when was that? Back here in August. That's why I stopped talking about that potential double bottom at that point. Because remember, I was thinking maybe it might be an Adam and Eve double bottom here. But, you know, again, with it breaking out and then immediately pulling back down into it, I wouldn't trust that as a double bottom. But, yeah. You don't like the volume confirmation? You don't like the higher volume as it accelerates out through there? That's what we're looking for. So usually you have your highest volume at the head, right in there. And then here we are with a similar volume as we rally and break out. So the volume profile fits what I would normally look for in an inverse head and shoulders. You got large candle spreads off that right shoulder and expanding volume, breaking out through it. The breakout itself is a large candle spread and spike of volume. That's what we look for. Have a great day, Mark. So, I mean, again, if we're trying to look at these patterns, how we would look at them properly, I think that's what we would look at, though. So, yeah. Yeah, but you're looking at, you're not comparing this volume to this volume, Hank. These volumes are comparable. These swing low volumes. You don't compare them to the volume up here with what's potentially happening right here. So, yeah, I'm not a big fan of the patterns overall. You know that, Hank. But, like I said, whether you want to look at it as that, or you want to look at it as the breakout of this ascending channel resistance, which it broke out, came back, retested it as support, and it's breaking out again now. However you guys want to look at it is what it is. Just some possibilities there. So, let me see here. So that's the DXY. That's the dollar. What else do I got for you guys here? Let's see what the Qs are looking like. So if you look cubes here, guys, right? Look at that. So again, if you follow in the newsletter, I put the cubes, this chart in a few weeks back, and then I updated, I believe, this week. And so we've got what appears to be 5 down, and then A, B, C, 3 up here. So we're just looking for a breakdown below wave B of 2 here at 353.15. If we can get that, that should signal that it's going to continue lower. Wave 3 has a minimum expected target there of 314, which puts it right in that high volume node. Thanks, Crypto Girl. I try. Like I said, there's so much information. I could write that thing 3 or 4 times that size. But to keep you all interested, I don't want to put too much information in it. But again, we did have this breakdown, and it broke down on volume and gap down. So significant breakdown through that support, came back up, retested that. You can either look at it this support area or, the support there. But either way, rejected the support, continued down lower, rallied back up, rejected at the daily pivot here, coming back down. So I think if we're doing 353.15, getting below that, I think, we're headed at least down here to 314. Let me see. Yeah, see we get there, and that gives us that 2.0 right about the EQ of this purple demand structure right here. So right around that 300, 302 kind of area for wave 5 on that drop there. Let's see here. And so I think we've got that. But, if we look at that and then we bring up the NASDAQ, right? Because, you're going to look at the cubes here as kind of like your bellwether for what's going on with technology stocks in general, right? And so NASDAQ is tech heavy. And so NASDAQ, continues to make its drop here. Let's kind of zoom out a bit. So I've got this potentially as a 1-2-1-2 here coming down. But I mean, off that top, we're already down what? From 15,401 so far to a low of 14,181. 15,400 to 14,100. I mean, that's almost what, 1,200 down off that top here back in September, first week of September. And we're dropping down through some potentially getting ready to drop down through this area right here. I think this is kind of an important area because if we look at it, resistance and support right here, right? So if we're kind of getting through this 14,177 kind of area, I think that's really an important area to pay attention to. He's dropping down through it, just gets us below that support resistance flip right there. So I think if you're in the markets there, you got to pay attention to that. Locally right now in the 1 hour, we're kind of dropping below the pivot here. Tried to rally back up, got rejected, starting to fall again here. Look at that 4 hour. Lots of room to continue falling if it wants to, but it's also got room to go up. It could curl back up here and do like this here, where it kind of pushes up and does it. But If it's going to go down, there's a lot of room for it, for price to fall on that. And zooming out to the daily, you've got your daily crossing bearishly right now. So if this continues to stay down for the day, I mean, you got a bearish crossing daily Stoke. You rallied back up in 3 waves here. Got rejected the pivot. So big picture here. If you're dropping below this wave, this A, B, C, so this B right here, at 14,259 and 7 cents. If you drop below that, that should signal that you're heading down further from that now. And remember, I'm looking at this as a 1, 2, 1, 2. So that means locally here, I think I've got that 3 already set up on there, don't I? I'd probably give us that move down there. Yeah, see down here, 3 right there. Not quite, right here at about 13,298. Which gets you, as you can see here, gets you right here to right where this gap starts, right there below it. So it makes a lot of sense in terms of that. So yeah, I mean, again, if I'm looking at it, things don't look too exciting for stocks at the moment. I mean, exciting as far as going up. Now, where does that put us with what else is going on here? I've got oil. See here, because we got that whole energy thing going on right now. So potentially a 1, 2. I'm sorry, a 1 working on a 2 back up here. 15-minute, we're right here. So 2 could be done right here. A, B, C. Right there around the 78.6 retracement. And so then we get, our movement here, and we'll look for this to kind of break down and continue lower here. Stoke RSI kind of dipping into oversold there and trying to rally back out, but it has a lot further to go before it bottoms out. RSI kind of sitting just right around 50 right here, 49.50. So again, could be setting up for a potential drop or potential rise on that. It's just neutral right now. Price does sit below the pivot though. So yeah. Let me see here. So that's kind of what we're looking at here. We'll see what happens if we're breaking out above this swing high here at 81.62. That might be a clue that the top is not in yet and we're heading up higher. In that case, maybe up here to R2 daily pivot at 82.5 or so. But this is what we've got right here at the moment. Yesterday had this large upper wick, price closing in the lower half of that. And then we've got this doji kind of kicking in right now. And of course, if we look at volume here, all the volume in this, a little bit less volume into this. And here we come with, getting to a similar volume. It's only 1238 right now. And now we're getting this doji here. So a lot of supply coming in this area, which is just right above what we had here. So we've got to see if it can continue up or not. If it can't, coming down, that might be the top there, in which case we look for further down, right? Todd Butterfield's PNF chart more or less has the same targets I have. For which what? I guess I can just click on it. Bitcoin. Let me see here. So this is what Hank's sharing with us. This is Todd Butterfield over here on it's at Wyckoff on crypto. He has the Wyckoff Stock Market Institute, which was originally founded by Wyckoff. He bought that. But anyway, so this is his PNF count. Yeah, it's got that same up there toward potentially 72.5. As always, the PNF counts potentially change as you continue to build up. So you might create a base along the way where there's reaccumulation going on, which could then lead to higher targets. But his targets here are based off this area down here, this accumulation area, back up the edge of the creek. Yeah, coming up here, marking up. Yeah, so I mean, still looking more or less where we're kind of looking at there. It looks like he's got a 63,588 on there, and then that's 72.5 or so up there. So objective for the backup is 63 to 73.9. Yeah. Because you take a couple of different counts in there, and then it gives you a range, and then you work with that range. So, yeah. Okay. Well, that's good, I guess. Nobody knows his stuff. I've never really talked to him. So I don't know. I try not to be, though I assume some people probably think I am, right? It happens. Let me see here. So again, Dow Jones right there. Oil right there, so we want to see what happens there. Crypto Girl says, I just want gas prices to go down both for my car and Ethereum. I know, right? Those Ethereum gas prices are ridiculous too. Which one hurts more, guys? Ethereum gas prices or your petro? That's what I want to know. We're still doing about $2.60 a gallon, I think, here in the Bernie area, northern San Antonio. Natural gas, man, again, going with what's going on. I think we've still got a wave 4 in progress here. Looking for a likely target somewhere down around this wave circle Roman numeral 4 target. Supported about 4.735. That's confluence there with the 1 hour or 4 hour S2 pivot. Could drop a little bit lower here to the high volume node at 4.64. So kind of around that 9 or 10 cent range. If we do happen to get a breakout above, basically an impulsive breakout above this pivot, I might then consider that maybe wave 4 is complete. It has dropped below wave A here. We've got this flat kind of thing going on. But as long as it stays below that pivot, I'm going to look for that to continue on down here. The real kicker, of course, is the breakout above wave B. At that point, yeah, we're heading up there. So we'll see how that works out there. If we get down here, wave 5, as you see right there around that 7.5 area is where I'm kind of looking for it to reach. But then at that point then, if this count is correct, at that point we should then be looking for a nice big 3-wave pullback on that. All right. You're at over $5 in Southern California. Need to buy a Costco to keep under 5. Man, you sound like my dad over in Arizona. I was just on the phone with him last night, and he was talking about gas and having to go to Costco and everything too. Though prices there in Arizona are not quite as bad as they are there in California. Right. Eric Quinn, it's 3.25 there in Central Florida. Yeah. I kind of did that as a nanny boo boo to y'all with the 260 gas over here. Gas prices are pretty decent over here right now. Sure. I know it's a lot higher elsewhere. Yeah. You guys, the Ethereum gas prices are killing you guys the most. Hank, you say it's $6.95 per gallon, give or take, there in the Netherlands? Man, yeah, that makes sense. I mean, you guys, your fuel prices over there are definitely higher than what they are over here usually. And then you have all that issue going on over there as well. So, does that just mean that y'all hop on your bicycles and ride around a bit more, or do you still drive and not worry about it a whole lot? I know you probably have to drive your car to work there, don't you, Hank? But people in general in the Netherlands, I'm just curious, with the prices at that kind of high, do they tend to walk and bike a bit more, or do they just kind of drive and deal with it? 50% is tax. We have a road tax. Yeah, we have a road tax as well. It's just in the actual gasoline. That's another thing Biden's looking to do. He's looking to increase that significantly to start taxing you per mile driven. So, yeah. Work for home is the new norm there in the Netherlands? Oh, okay. So there's a big pullback on that driving anyway because they're working from home. Okay, yeah. That makes sense. That makes sense. Crypto Go, you think you need to move, but you love the ocean. Yeah, here in Texas, where I'm at here, we're about 2.5 hours from the coast. But it's definitely not a Florida or a California coast. That's for sure. We can go 6 hours down to South Padre, and that's a much nicer beach area. It's further down south. Or we can go, 4.5 hours over to Galveston, which has a little bit of a different vibe there than Corpus Christi does, which is 2.5 hours. So, yeah. But still, none of the beaches are really like Florida or Hawaii or California or anything like that. There's going to be so many broken odometers if that passes tax per mile. That'd be crazy times, right? But, it goes to that whole thing I was talking about earlier, guys. When you look at everything that's kind of going on throughout the world right now, I know there seems like there's a lot of complaining going on, but the fact that there's that complaining and things being changed and, whatnot going on, government more involvement, all these kind of things, I think that kind of says, that we do have that much more significant kind of change going on at the moment. And really, I think it really sets it up for something significant to happen because it's been such a significant series of changes and more trying to get pushed through. We had to talk about the debt ceiling recently, and how it's kind of, a lot of people view it as a joke or, as a political tool, but it really is kind of like a political tool because, again, you have Democrats and even the Democrats are infighting. So you've got your progressive Democrats and your more moderate Democrats. And your progressive Democrats, led by AOC and Sanders and them, are really pushing for these huge, huge government changes, right? Where government just spends freely, right? And your more moderate Democrats are saying, well, I think some of these things should be done, but you're going way overboard about it. So you got the infighting there. And Republicans are like, listen, Republicans spend money too. It's not like they're not going to spend money. But they're saying, hey, listen, this is ridiculous what y'all are doing, all this stuff and what you're trying to do here and the things you're trying to add into these other bills. And so we're not going to we're not going to agree to the debt ceiling raise other than what they did here, which was the temporary one through the beginning of December. And what they're going to basically, what they're saying they're going to force the Democrats to do is use this other process. But the Democrats, but this other process limits what they can add in to this debt ceiling and everything. And so a lot of what Biden wants to push through with his $3.5–4 trillion thing would, a lot of the significant parts of that, or some of the significant parts of that would have to be removed. And so yeah, political tool, yeah, probably. But, it is what it is. So yeah. Yeah, we don't trust government, Hank, for good reason. But anyway, yeah. So again, guys, at the end of the day, I'm not here to tell you right, wrong, or otherwise the way you think about government, but just remember that both sides generally do the same thing. It's two heads of the same snake. Government does not shrink under either head. It continues to raise. And what one pushes through, a lot of times you guys are like, oh no, Republicans are doing it, and I'm a Democrat, so Republicans shouldn't be able to do that. But then when your guy comes, you say, oh, well, the Democrats should be able to do this, but then you pass it, right? But then the Republicans come in and use that same tool, and then they're like, oh, wait a minute, you can't use that. Well, yeah, the thing about government is, and the same thing with Republicans, they do it the same way. So the problem is that whatever government does is available for both sides to use. So what you may think is helpful to you one day is going to be something that's going to be very detrimental to you another day. But most people don't get this. They just want their immediate gratification with the government and what's going on there. Yeah. So, good times, right? But anyway, it's just, I think there's a lot of misunderstanding with government stuff. It's the same way there is in the markets, guys, because people are very short-sighted. They're very much me. And they fail to see the things that they're doing on these short-term moves that they make, for instance, in the market, and how that contributes to what they're doing as a bigger thing. So if you have rules, which you should have as a trader, trade-based rules, right? And if you have those and you, oh, excuse me, sorry about that. The hiccups there. But if you have those and you ignore them on a small time frame trade, that's going to lead to ignoring those rules on larger time frame trades as well. And so that's why, again, at the beginning of this, whatever you want to call this episode, this whatever, I talked about discipline and being able to do these things as you should, right? And again, that's where most people fail. They don't have the discipline, not just in trading, but in life. And I'm not talking about anybody specifically to hurt your feelings. I'm just saying people in general don't have that kind of discipline, guys, okay? Do you remember we were talking about a documentary of TWC? Still think that would be a good idea, and we'll include my dad's old car with the bull horns on the hood and cow horn. Good stuff. Yeah, man, that'd be crazy times, right? I don't know if we got really bad stuff coming up here with the whole with the whole economy and whatnot. I don't know that a whole lot of people are going to be interested in trading, which again is this whole misunderstanding of what it is. People come in, they say they want to be traders, and then they come into trade, and then they find out, oh no, I'm not really wanting to be a trader. I'm wanting to be an investor. I just want to be an investor who can sell the very highest price and buy the very lowest price. And so that's not really good, because the thing is, if you're a trader, you don't care as far as the market goes, whether it's going up or down, because you can get in there and make money. And that continues to be the important thing, guys. But what we usually see is when, for instance, when Bitcoin and the crypto market gets into a bear, gets into this bear market, most everybody's out. Look at how many people aren't around anymore from just in 2017 highs there. Some of y'all were there. You see a lot of those accounts that were big, in the final end of that year, no longer there. We're going to see the same thing when this happens this time. A lot of these accounts that have sprung up and just marketed really well, they're not great traders, but they've just told you guys what you want to hear enough times and enough ways that you follow them, and they've got these big followings. During the bear market, a lot of them are going to disappear. Very few people actually hang around because they didn't really know what they were doing in the first place. And that, that can be a lot of issues there. Let me kind of hear. So, yeah, when we're looking at all this, let me go. Well, I got a minute here before I have to go. Let me see here. Oh, what's going on with silver? Let's see. So silver's got this whole kind of sideways thing going on here from back here around the 3rd of October. So just over a week, right? Almost a week and a half here. I think this may be a 3-4 here, and then a 1-2, and then maybe a 1 2 here. Maybe we have an ABC as a 1-2, ABC as a 3-4, ABC as a 5. Maybe it's a leading diagonal type of thing. Let them come back down. Right now, if that is wave 4 at the top there, wave 5's got a minimum of $20.585. Minimum. If that's correct there. If this is not a leading diagonal here, and this is just 1-2 coming down, wave 3 has a target of this orange range right there, about 21.80 to 21.91 kind of area. If we break out above swing high here, that'll invalidate the count. And I think if we're doing that, let me see here. I don't know. I'm trying to see here if maybe we can get, if this becomes 5 down here. So this is a 1 and this is a 2. Still working in there. So if we're breaking out above wave 4 here, we're almost right there at wave 1 here. I'm sorry, wave 1's up here. So we've got room that wave 4 could still go higher, but I think if we end up breaking above it, I think that's going to tell us that we have a 1 down here instead of a 3. This is a 1, and then we've got 2 playing up here. In which case, we're probably looking up here around this 23.8 kind of area at this high volume node. What is that going to be in terms of pullback here? 23.8. Yeah, look at it. It gives you the 70.5. Right up in that kind of area. So, you know, it just kind of prolong that further downside, I think, if it does that. Let's see here. The daily, look at the daily here. So we're right now finding resistance on that daily at the daily pivot. Daily Stoke RSI. That up here. Almost topped out and overbought. Crossing bearishly. So again, you know, if we get this rejection here, that should send us pretty well lower there. We've already dipped below this swing low over here back from 24th of September. Yes, of last year. Remember, this is the range right here. And so my big concern in this range has been all this huge supply that came in right here. You see how significant that was? And throughout here, we continue to have spikes of volume here. Remember, usually in reaccumulation, you're looking for something like this right here. Instead, generally prices are, you know, these you've got this area here where you get these spikes consistently still in this range. And then you have this huge one up here back in February of 21. And that's what concerns me about this range. Now, that said, we've got this move down, and we don't see any real expansion in volume as we're coming down yet. So I'm wondering maybe if we get this drop below this one here, do we get that expansion here? We've got that open. Do we see volume start picking up here? Or even, you know, this kind of area. So that's what I want to see what goes on here on that to kind of get an idea of what, you know, what we may see happen there. Let me see. Common man, you're looking for the Dow to run? It could, but man, it's got a whole lot of work to do right now. Don't forget, guys, tomorrow, again, you know, we're going to have the September inflation report coming in. And I'm telling you right now, you know, so with, I got to get going here in a minute. With Friday's non-farm payrolls release, you know, the consensus was for 500,000 new jobs. We got about 194,000. That doesn't look good, right? But the thing is, they raised August new numbers up almost 50%. So there's that. You know, August was revised upward about 50%. And then we've got the unemployment was 5.2, and they were expecting it to drop to 5.1. We got a huge drop to 4.8 on the unemployment. So, you know, yes, we didn't hit 500,000, but that was really kind of lofty. More importantly, we still got almost 200,000 new jobs. Again, August new jobs were raised 50%. And the big thing being that unemployment ticked down huge. From, you know, was expected 5.1, went all the way down to 4.8. Now, the important thing is tomorrow. What does that CPI report say? Well, if it comes in and still has that inflation around 5%, I think that gives us November taper. If there's any significant drop-off in that inflation, you know, maybe they'll wait till December, but I think taper's coming this year regardless. But, you know, I think that's what we're going to look at. We also have the FOMC minutes coming out tomorrow, so pay attention to them and what Jerome Powell says. His comments are, or maybe even what he doesn't say in relation. I remember last time that went out, he said, listen, all we want to see is some decent numbers from the jobs report. I would argue there's decent numbers. You know, and everything else taken into consideration, especially if that September inflation is around 5.1 still, or heaven forbid it rallies somehow, it goes higher. I think that really burns the Fed into getting into taper. Taper Talk says, hey, listen, dollar flies, right? Should be. Dollar should really rally if they say, okay, we're going to taper here in November. So yeah, that's what we're going to kind of watch tomorrow. Okay. Yeah, we have taxes are due the 15th, which is Friday of this week. If you got an extension prior to when they were due earlier this year, they are due on the 15th. I'm not sure that it's going to have any effect on the markets. I don't think so. You know, it's standard business, right? It's what we usually do. Like I do my taxes the same way. I usually put them off until October to get them done. So, you know, nothing there that would have changed my way in which I'm trading the markets or anything. So yeah. Kryptonio, you like platinum, but just because you think it's cool. It's cool to say you have platinum, right? Let me see here. Hank says debt ceiling is not really a thing. It actually is here in the U.S. It's the reason why they had to kick the can down to December or default. Debt ceiling really is a thing. It really does exist. But he's just saying it's invented to barter political games. You know, whatever you think about it is, guys, it is what it is. It's still there. You know, as Hank showed, you know, last week, even, you know, if you don't have it, and even if you have other rules in place to keep, you know, things from rising, from the debt ceiling, from, excessive debt, as Hank pointed out last week, it still gets raised, right? Those limits still get raised. So, yeah. Let me see here. Anyway, so yeah, I guess that'll be it, guys. It's 1 o'clock, so I'm going to get out of here. But, you know, again, right now, the markets aren't really saying that there's anything great going on in general. The dollar continues to get stronger. The rest of the markets continue to drop off. The only one, of course, outside of that is Bitcoin, which has continued to rise. But, you know, reality is we still have to get above this 60. Here on Coinbase, it's 64,899. We still got to get above that. I think we should. I think we're headed that way. You know, similar to what, you know, I showed you with Todd Butterfield there and the accumulation and the back of the edge of the creek and all this stuff. You know, it's the same thing I've been talking to you guys about. So, you know, again, we're both seeing it the same way. And no, it doesn't mean that it's necessarily right, but I think, you know, there's a good likelihood that this continues up there toward those new all-time highs. But, you know, again, guys, if we do see some kind of economic rollover here into these last few months, I don't expect that Bitcoin will continue to rally through that. They may, you know, a little bit beyond it start, but, you know, people are eventually going to cash out because they're going to want cash. Again, you guys have to understand when the economy turns down, people go to cash. They want to make sure they hoard cash, which makes it difficult for people who need to pay their U.S. debt in dollars. You know, they have to go out and get, which means it's more expensive, which means their debt's more expensive, which means they run to get it real quick. And it just kind of feeds upon itself and pushes the value of the dollar up. You know, at the end of the day, the U.S. economy is still doing a lot better than most. It's doing better than the EU. It's doing better than a lot of the others out there. And so, you know, when it comes to the dollar, it's not that that the economy has to be doing great. It's just that we have to be doing better than the others. We have to be in order for the dollar to continue to gain value, right? We just have to be doing better than everybody else, or, you know, significant group of people, right? The biggest one being the EU. And again, with the EU kind of behind the U.S. in recovering, you know, I think, the Euro USD plays at 57-58% of the DXY weighted value. So, you know, that should have the dollar rising against the euro, which means the DXY itself should continue to rise. But we'll see how it plays out, guys. You know, it's all speculation, right? That's what we're doing here. We're just trying to be smart about it, right? So we'll see what's happening. I read that as you're having a big case of jelly, Hank. Oh, man, a big case of jet lag. Go get you some sleep, man. Anyway, the rest of you guys, hey, I'm out of here. I hope you guys have a great day. As always, you can join us at howtotradetowin.com. Would love to have you there. Howtotradetowin.com. Jump on in there, get in. And as we get texaswestcapital.com up and live, we are going to help you guys transition over there. We're just going to redirect it over there, and you'll just be able to log in over there. Shouldn't be too much of a disruption, but you're going to see a lot more functionality. You're going to actually see, I've got all this education and stuff, but I'm actually put it in the form of a course, and different courses in there for you guys with quizzes and whatnot to help you see if you've retained the information as you've gone through it, which, this has been a request. So hopefully it's something that helps everybody else out. And of course, everything else we're going to do. Alpha Trader, don't forget that. That announcement's coming up before too long. Friday, guys, I'm going to draw for the a PS5 here on Friday. So make sure you guys are tuning in. By the way, if you win that and you would much rather have 6 months of TWC, I've had a lot of people ask about this because they're much more interested in what we do there. I'm going to go ahead and make that available. Means I bought the gaming system for nothing, but hey, whatever. It's about you guys. So if you win, you want to do that, there you go. And so that way it just it gives you that opportunity, guys. Okay. So there you go. Again, similar value, $200 a month. I guess it's not really similar. I mean, it's $1,200, but a little bit more value on the 6 months of tier. By the way, it's tier 3 access, not tier 1, not tier 2, tier 3. So we'll give you guys that ability to choose that, and I'm going to do that for all those drawings, for all those PS5s and Xbox Ones. And if we get to the end of this here, as we get into December, and I've got some of those left over, I'm just going to go ahead and sell them. No worry to keep it around, right? Or maybe I'll figure out something else to do with them. So anyway, so there you go, guys. I hope you guys have an amazing, amazing week. At the end of the day, guys, I'm not here to say I definitely know what's going on. I'm not here to say you're definitely wrong. I'm here to share the things that I've learned over the last 25 years of doing this. And the things that I've learned that have helped make me successful. And, at the end of the day, all I can do is give that information to you. It's up for you to decide whether you want to accept it or not. Lead a horse to water, can't make them drink, right? So we'll see how all this goes. But hopefully you guys will continue coming back and or join us over there at howtotradetowin.com, okay? I hope you guys have an amazing day. Like I said, amazing week. I'll be back on Friday, 11 a.m. Central Standard Time. Same channel, whether it's Twitch or YouTube. So join in if you get the chance there, all right? Remember, the only thing you control in the market is how much you lose. That's it, guys. So risk management's where it's at, all right? Take care.